Private company will never go with prospectus. It is only the public company which goes with the prospectus. Later, whatever the broker has agreed to the price, the company will seal that. That is, subscribe to a new issue of shares according to the terms and conditions of the company. So you give them the first privilege. They need to go with so many other formalities which from private to public they need to actually transfer. Hello everybody, a warm welcome to one and all. I'm Vidhyaashram from the Department of Business Studies in Vidhyaashram PU College, the Temple of Excellence. Here in this session, I'm going to explain you about the primary market. Now, lastly, I told you about the money market in the previous session. The money market is all about the 1 year is the maturity of money market. Let's check what exactly the primary market is all about. Now, primary market is also known as the new issue market. What is it? It's a new issue market. That means you have the shares and the debentures which they will actually give it in the first phase. That is called as the new issue market. It deals with new securities. Please understand the word. It deals with what? New securities being issued for the first time. Whenever they issue any security for the first time, when they introduce it, they need to introduce it in the primary market. So here we'll talk about the securities, right? Securities. Now here what happens is whenever a company needs to sell its securities for the money transformation, what exactly they do is they need to choose which market is suitable for their securities to go. You have primary market as well as you have secondary market. So in primary market, what happens is they will issue fresh shares. They'll issue what? Fresh. That is, all the fresh securities will be issued where? In the primary market. Whichever is already issued in the primary market, if you want to exchange those securities, that will actually go in the secondary market. So we'll talk more about secondary market in the next session. The essential function of primary market is to facilitate, what is it? To facilitate the transfer of investable funds from savers to entrepreneurs. Now, anybody who have saved the money, we call it as the household savers. Now, those people will actually invest in the entrepreneurs business. That is the people who have started the business. From savers to entrepreneurs seeking to establish new enterprises or to expand. What is it? Or to expand. So, whenever they go with it, I'll tell you here we have something called the private company and then we have the public company. Now, whenever a private company will turn itself into public company, again they need to actually go with this kind of a thing. That is, they need to sell their securities to the public, they need to invite the public, they need to go with so many other formalities which from private to public they need to actually transfer. So here what happens is, one is when they want to establish a new enterprise, they will actually do this in the primary market, or whenever they go with the expansion, they go with the primary market concern and then they'll sell their securities to a fresh securities. Once though the issue securities for the first time. So whatever happens for the first time, when we go with exchange or they deal with new securities being issued for the first time, we really need to go where? To the primary market. Hope you have understood what exactly a primary market is. So here primary market, what really happens is the investor in this markets are, who are the people who will actually invest? One is the bank. What is it? The banks are the one who will actually invest in these primary market. Secondly, we have is the financial institution. Financial institution, right? So they are the one who will actually go with it. Thirdly, we have the insurance companies. then you have mutual fund and individuals. So anybody, whoever are interested to buy the first or the freshly shares which is given by the company, they are supposed to enter the primary market. Next we have is a company can raise capital. Yes, company is a perpetual succession with a separate legal entity. So what really happens is they go with the kind of raising the capital, that is a company can raise capital through the primary market in the form of equity share, preference share, debentures, loans and deposits. That is like public deposits. You all have come across. I have told you what exactly a public deposit is. So here the company can raise capital through primary market. So whenever the company needs any kind of a capital from the public, so what usually they do is they start giving, that is they start giving the shares. If the people really want the share at the face value as well as the market value, they buy it for the first time. And here what happens is whenever they go with the primary shares, that is primary market, they buy it from the face value of the share, and then we go with the next things. So here what happens is the methods of flotation you are supposed to understand. When I say flotation, that is how the securities are brought and sold. That is what we call that as flotation. That is from how it has been transferred. The first one is offer through prospectus. Please understand the word here, prospectus. Now, private company will never go with prospectus. It is only the public company which goes with the prospectus. And prospectus are mandatory when it comes to public company, because in the 2013 Companies Act, it says that a public company should mandatorily, they need to give the prospectus to the public. So here, because of the prospectus, people will actually know that these are the companies which are selling the fresh shares, and then they buy it. Secondly, we have is offer for sale. Now they have given an offer saying that they are selling shares. That is what we call that as offer for sale. Next is private placement. Now the company can actually go with a private placement as well. That is, being a private company, usually what happens is they will not tell the public, the entire public. They can give it to the people whom they really want to. So here what happens is it happens only in the private company. Rights issue and EIPOs. Now electronic is what the E is. Now IPO is initial public offering. What is IPO? Initial public offerings will actually happen. So let's check one by one how exactly it is. Offer through prospectus. Offer through prospectus. Offer through prospectus is the most popular method of raising fund by public company in the primary market. I told you about this prospectus, isn't it? Only the public company can issue prospectus, This involves inviting subscription. So I have told you what is the minimum subscription to enroll yourself in the primary companies, that is a private company and the public company. When it comes to the private company, it is 1 lakh is the minimum subscription, but whereas you compare that with the public company, it is 5 lakh rupees in the public company from the public through issue of prospectus. So this is what happens in the offering or offer through prospectus. Next we have is offer for sale. What is this offer for sale? Here what happens is under this method, securities are not issued directly. They are not issued directly to the public, but are offered for sale through intermediaries. When I say intermediaries, we have what? The brokers. Who are they? They are the brokers. Now when I talk about the brokers, here what happens is we have people like the stock brokers. Who are they? They are the stock brokers. Now we have few of the houses, that is issuing houses. Those people will actually come and they will take this as an offer for sale. So under this method, securities are not issued directly. They're not issued directly to the public, but are offered for sale through intermediaries like issuing houses or stock brokers. So we have two people, that is the issuing houses or the stock brokers. In this case, a company sells security embolic at the agreed price, that is whatever the agreed price is there, to brokers who in turn resell them to the investing public. That is, the brokers will actually buy it. Now you need to know that the brokers are there, then you have the company you have, and then you have people called as, say, individual. Let's go with this example, individuals. Now here what happens is the company wants to sell their securities, so they need to have a sales. Let's go with it. The company will tell this to the broker will quote a price. Okay, he'll quote a price. Later, whatever the broker has agreed to the price, the company will seal that. That is, in this case, a company sells security. The company is selling securities en bloc at an agreed price to broker. Now, broker will agree for a price, say example, 100 rupees per share. Broker, who in return, what he does is the broker will sell it to the individual. Now he will do the selling. Now he'll sell it to the individual, resell them to the investing public. Now the broker can actually take his commission, that is whatever the individual is actually going for. So here what happens is, you need to understand, the company is not in demand. It is the broker who is in demand. So this is what is called as offer for sale. Next we have is private placement. I told you about this private, what exactly it is. It happens only with the private company usually. So let's go for that. Private placement is the allotment of securities by a company to institutional investors. Who will actually go with it? Institutional investor and some selected individuals. What is it? Selected individuals. That means in a public company, usually what happens is everybody are treated equally, but only in the private company what happens is we can go with the selected individuals. It helps to raise capital more quickly than the public issue. So that is what the private placement is all about. Next we have is rights issue. Rights issue. This is a privilege given. Now when I say rights issue, what is it? Rights. They have the rights. That means they have privilege. They have privilege. Okay, done. So this is a privilege given to the existing shareholders, to subscribe to a new issue of share. Whenever they go with the right issue, this is a privilege given. Whom? To existing shareholder. Now earlier itself we have the shareholders, isn't it? Now we have our shareholders. Now you give them a privilege. Issue. Subscribe to a new issue of shares according to the terms and conditions of the company. So you give them the first privilege. The shareholders are offered the right. What are they offered? They're offered the right to buy new shares in proportion to the number of shares they agreed to possess. That is what happens here. Now you need to understand that whenever they go with the right issue, it is not for the new shareholder, it is actually for the old shareholder, that is the people who are already the shareholders of the company. They get a privilege over to buy the new shares which has been given by the company. Next is EIPOs. Now IPO means what? Initial public offering. Now here IPO, where you will actually understand that a company proposing to issue capital to the public through the online system, that is called the what is it? Online system of the stock exchange, has to enter into an agreement. You are supposed to go with an agreement with the stock exchange. This is called as an initial public offering, IPO. SEBI registered brokers have to be appointed. Now you need to appoint who? The SEBI, Securities Exchange Board of India. That is called SEBI. Registered broker, only those broker who are registered under the SEBI regulations, only with those you are supposed to have it. Have to be appointed for the purpose of accepting applications and placing order with the company. So here what happens is, you need to understand that whenever these IPOs are actually gone, that is initial public offering, you need to know that This is actually done by the SEBI registered brokers only. So these are the things which you people need to understand. Now, financial market is not a very easy subject. You need to go with more of logical understanding here. So if you have any doubts, you can actually call us. We're always there to help you. Thank you so much, students. I'll see you when I see you.